Good morning and happy Friday, everyone. It's May 9th. It's Ben Buckner and Dan Bossy with Ag Resource Company in Chicago. We got another market that seems to be supported, again, kind of across the board, financials and ag markets, raw materials. And it seems like to one extent, we've got a macro Friday, but also I think there is some fundamental news that's starting to trickle in. We, of course, are paying more attention to weather. China is making some moves. So I do think we're going to see support through the day. But Dan, what do you think on this Friday morning?
Well, I think that's right, Ben. It's been kind of a nasty week for the corn market in particular, as it's fallen almost every day on massive fund selling. I think the July corn in particular, as we broke support at 450, really kind of got a lashing as the speculative community came after it. But now the cash market's starting to firm. We're starting to see better demand. And at least for me, the brave-hearted should be looking at the long side of July corn. But let's kind of jump into the presentation here and kind of go where we're at. One of the big news features, we talked about it or have been talking about it on this discussion about the dryness across China. Now, this morning, we're getting confirmation that China has bought Canadian and Australian wheat, 400 to 500,000 metric tons. Some people would take that number up to 700,000 tons. Now, why is this important? Well, the Chinese have not been buying wheat looking all the way backwards to March of last year. So this is kind of a significant change for China. And again, if you look at China last year, it only imported 3.5 million metric tons of wheat. It was one of the real drags in the wheat market for exports as we got into the last half of the crop year. But this is a breath of fresh air for the wheat market, and maybe telling us today that FOB wheat prices in a new crop position, maybe 220, 215 is cheap enough as it sits today. As we've been saying, there was some rain last night in portions of what we call Hebei, not Henan, but Hebei. And so as we look at that section, the southeast section of China, they did get some rain. But boy, there's a fat portion of the winter wheat areas in China that are still dry. This is a rainfall map that goes back, or percent of normal rainfall that goes back from April 1st to May 22nd. So what I've done here is I've updated it with the 10-day forecast so you can understand why the Chinese are buying some wheat. Now, again, we've said before, unquantifiable numbers in terms of irrigation in China. We think it's about 40, 45%. But with that said, China is still seeing a degradation of its wheat crop. Chinese wheat stocks this year will be the lowest since 2016, depending upon where USDA recognizes the wheat crop as it sits today. The other news, of course, is with the trade news that's going on in Geneva, Switzerland. The Chinese and United States will be meeting on Saturday. So that meeting starts tomorrow. I'm heading to Geneva for our grain conference, GrainCom, next week. But as we look at this is important because now the Chinese United States are finally talking. And Trump this morning saying that he could reduce tariffs from 145% to 80%. It seems right. Now, for that, we would need some progress. But don't forget, in the background, we've got this phase one trade agreement and whether or not the Chinese would buy the additional $85 billion that was unfulfilled due to President Biden coming in and providing no direction to the Chinese. So as we think going forward, this could be important, and some agricultural goods could be included in that. So to me, if I look at the upcoming meetings, the market's poised for bearish news, but if there's any surprises, maybe they're tilted to the positive as we think forward. Just a little bit about where the markets are here today. We at Ag Resource have had this downside target of 430 to 440 on December corn for an extended period of time, going back to early April. That assumed, of course, normal weather. We are now down to that. We reached in the 235 and 3/4 yesterday. That's not saying the market couldn't get somewhat cheaper after the May report of its bearish. But that being said, that red line indicates where the marketplace is looking at stocks to use ratios for the May WASDE. We'd be up around 15%. So that would simulate or discount U.S. corn end stocks at about 2.3 billion bushels. We believe that's too high, relatively speaking, for this time of the year and for the unknowns relative to acreage and yield going forward. Remember, in the last 6 years, the United States has come out with yield estimates in May. Each and every case, we've been lower by the final. So we'll see if we can extend that ratio to 7 this year. Lastly, we'll finish up, Ben, with one other graphic here, which we want to look at, which is option volatility. Surprisingly, option volatility amongst all the trade, weather, and other geopolitical issues has been declining down for the last 3 weeks. So as we look at May option vol, it's cheap, particularly in commodities like soybeans, which has been in a range. So if you're looking at the market and wanting to take positions, options offer the best opportunity because of low volatility. They may decline a little further, but I think volatility is cheap enough as we had a growing season ahead and we are uncertain about what the summer growing pattern will be. With that, Ben, that's kind of a setup. My view is that the grain markets have gotten cheap enough. The question, of course, is getting by the USDA report on Monday and then understanding what the U.S. and China and future trade deals will do. Of course, we had that trade deal yesterday from the U.K., which featured prominently ethanol, also beef, but maybe even some feed grains. It's going to be important down the road, but we got to get more details before the market is willing to grab and go on that kind of information.
Yeah, all good stuff. All very, very good information. And I think the option volatility is kind of misaligned today. I know that we've got a lot of chaos, uncertainty. There's not a lot of bullish enthusiasm when we look at sentiment today. But I think some of the facts are we do not have a lot of corn. Canada does not have a lot of canola. Drought is budding in China. We've got some other weather hotspots in the world. And to your point about corn, we need to grow a big crop to validate, December corn anywhere close to $4. So maybe we get there August 15th, September 1st, but that's just kind of a long ways away from now. So I do expect the markets to be a lot more sideways after we've seen the break. And it's like every year, it's all about Mother Nature and throw in some trade policy issues. But yeah, U.S. and China may be starting to play ball, and I think that's important. And, AgResource being in Switzerland next week, I think it's going to be helpful. We're going to kind of be on the ground and see if anything evolves there. So all the best. Happy Friday to everyone. Dan, do you have any final words before we cut it off?
No, Ben, everybody have a good weekend. There's a demand hope below the market, and I think that provides some support here. That doesn't mean we're bullish, just demand hope that we go maybe in a more volatile sideways range. But I think to your point, Ben, we need a weather problem or some kind of supply dislocation or confirmation of demand before we sustain a rally. Have a great weekend, everyone. We'll be back on Monday from Geneva, Switzerland, and Chicago, Illinois.